Well, good morning and hello for another episode of the Crypto Posse. So, I just want to say that there's one heck of a lot going on out there in this world. I seem to say that every episode, but that's because there is. It's a real freak show out there, ladies and gentlemen. And you know what? We're excited about it. I'm personally so excited about it that I can't wait to tell you what we're going to talk about today, which is, Jeff's going to bring up meme coin mania returns. Mike's going to talk about how it's been a busy weekend for the Trump administration. And Will's going to tap into market compass boom or bust. Now, what I hope is that those topics put a hook in you and you just want to tap in and tune in and get freaky with it, because here we are. Let's do this. Jeff, would you talk to me?
So meme coin mania returns. Is this a trend or a trap? What is causing this surge? Discount pricing for one. Late summer of 24, meme coins skyrocketed up. The beginning of 25, memes tanked 50 to 90%. So equals discount pricing now. Social media influence, TikTok, X, which is Twitter, Telegram groups, Discord, and YouTube influencers were a major part of a lot of these meme coins going up. It's what they were talking about. Late summer, a lot of YouTubers pumping the memes beginning in 25 were gone. So all of a sudden you go to 2025 and nothing is being talked about at all. It's just gone. Other reasonings: low trading fees, Solana and Base. A big factor is a lot of these have listed recently on Coinbase, which is one of the biggest exchanges. Also, Bitcoin consolidates, creates risk on behavior of returns, equals money flows into meme coins.
Well, you know what? That is one heck of a lot of stimulating stuff, and definitely tells us a big part of like where we're at today compared to, like you mentioned, a year ago, right?
Yeah, and I mean that's a lot of information too, but a lot has happened. When there's I think the biggest gainer in a meme coin was Mudang, and it went up 500% for the week, actually 550%
In a week?
in 1 week.
So let me just get that straight. So if you had $100 in Moondang,
Mudang,
Moondang,
yes.
okay. If you had $100 in Moondang, you'd have $5,000.
No, you have $550 profit plus
Oh,
your
oh,
100 you put in,
okay.
which
So
would
you'd
be
make 500 on
650.
your Hundy.
Yes,
Yeah. Okay.
yeah,
Well, that's pretty
five and a
exciting.
half, 5.5
I
times.
mean, that's
Yeah,
pretty exciting. So if you had 1,000, you'd have $5,000. If you had 10,000, you'd have 50,000.
you'd have 55,000 profit in a perfect world.
Well, that's very
Finding
exciting.
at
Those are big
finding at a
numbers in a
perfect
week,
time.
right? Those are big numbers in a week.
Huge numbers. And the interesting thing is Mudang is actually still rallying today. It's up about another 30% today, which is crazy for it to hold that long.
Yeah, I mean, that's just like, that's pretty, I mean, as they would say down under, bloody good, mate.
You'd have to have some nuggets to be buying right now after it ran up 500%, but there's people out there buying it. They're getting in.
I think it's the volume, and if you're looking at the chart, for me, yes, it'd be a little bit scary. I'd be looking at, so like Toshi went up about 130-40%, and then Peanut, these are other meme coins. And if you look at the bigger cap ones, which would be like a Bonk or a Shiba Inu, those SHIB is what they call it, about 26% for the week. And then Pepe is another one that's right in there. That one up 75. So if you're looking at this in a whole, the bigger market caps went up less percentage. And that's kind of how crypto works. If you look at Bitcoin, because of the price, it moves, but it moves a lot less than Ethereum XRP typically. And the same for the meme coins.
Yeah, because percentage wise, I mean, if it's already give or take 100 grand, I mean, if it goes to 105, it's, it's all cute or whatever, but it's not fat stacks as much as like something that was, went 500%. I mean, if for crypto to go 500% in a week, what would that be? That would be, it's at 100,000. That means if crypto went 500% in a week, that means it would be what, from 100,000 to 50.
500,000. Or
Wouldn't that be
yeah.
amazing? I mean, so it makes a lot of sense to come in hot on some of these memes. I mean, I know it's probably really risky, but they're pretty cheap. And like Mike said, if you got some nuggets, put them on the table. I mean, that's my twist on it, anyways.
Yeah, and it's kind of like history we've talked about in the past, history repeating itself. So if you go back to, excuse me, right around 2021, after everything skyrocketed in crypto, SHIB was the last, one of the last coins that 10 times, 8 to 10 times in that cycle. So if you look at SHIB is extremely low now. So in the future, I would say in a couple of months, I'd be looking for SHIB to possibly come on strong at the end.
Yeah, no, I want to touch on what you guys are talking about because you're right, Jeff. When you're looking at how these cryptos are increasing in value, it's all based upon market cap. So a lot of these smaller meme coins have a smaller market cap. So when you're injecting money into that project, it's a lot easier to move or, in my view, manipulate the price because Bitcoin has such a large market cap. In order for it to go from 100,000 to $500,000, which it will happen, and it will happen in our lifetime, but the amount of money that needs to go into Bitcoin for that to happen. And then the beautiful part about that is once the money is in Bitcoin, the other point that you guys were making was there's a rotation of money. So the big dogs, because they only have access to Bitcoin through the Bitcoin ETF, a lot of these big, huge companies, they can't invest into meme coins, at least above the counter, they can't because it's illegal. It's illegal for them to do. But when you see that rotation, when I see Bitcoin up at 100K, well, once that tops out and people take profit, where's that money going to rotate into? And it's going to rotate into these mid caps and these low cap coins. And that's when you're going to see typically what Jeff was talking about. That's when you see the end of a bull market because, like me, you're so drunk on gains and you got so much money that you made from the market. If you don't know how to manage that money, you're going to find yourself doing what I've done and buying things that are now worthless. And it's just a part of the process of growth, right?
And another thing too, when you're trading these meme coins, you'll get a lot of people that aren't putting in a lot of money, and they might leverage it. This isn't something. So when you go back to Bitcoin moving 5%, how are people making money? It's leverage, or the institutions with a lot of money. So because the market cap on these meme coins, they're pretty good for what they are actually, but you're not putting $1 million and leveraging 10 or 20, you can't. The market cap isn't, there's the liquidity isn't there to get paid. So they're bought and managed differently.
Which is such an interesting topic on so many levels. And I'm going to go to, the fundamentals of that statement, which is, and I've asked you this so many times and I have a hard time grasping it. We all have our strengths, and this one isn't one of mine, is understanding in a most summarized way you could what it means to leverage.
To me, leveraging would be like take real estate as an example because it's more relatable. And you go and you purchase a home, right? And you're making your mortgage payment. And what is that mortgage payment doing? Well, you're paying off this balance, this loan that you have, this supposed debt, right? But where you can change or utilize that debt, which is what the wealthy people do, is now you have equity in your home. So what you can do is you can now leverage that equity pull that out, and if you're smart with leveraging this asset, which most people do not do, and when they do, they're pulling out money and they're like, "Oh man, what car am I going to buy? What boat am I going to buy?" Well, now I'm talking about 2008, 2009, when everybody was doing this, leveraging their real estate. But the difference between,
Hold on. Let me ask a question real quick in the middle of that. Are you talking about basically the concept of taking your equity and using it as a versatile?
yes,
Okay. Which is different, I believe, than similar, but different to what you're talking about is how to gain wealth instead of go buy a cute new car or some toy. You're talking about how to take that and invest that further, growing your wealth instead of just being using it like a versatile.
yes, I work hard for my money, and just like all other Americans. And it comes back to a mindset thing, and it does come back to leverage. So you're working hard for all this money. You have this real estate, you have this home, but then do you know how to leverage that? And it's the same thing for me leveraging, say, Bitcoin. So I'm taking my money, say $1,000, and I'm putting it onto an exchange. Well, what that exchange is allowing me to do is leverage what's mine, just like that house is something that you could utilize to leverage to take from. They're allowing me to borrow against myself. That would be the best way for me to explain what leveraging is, because now I'm taking my money to the exchange, and the exchange is saying, we're going to allow you to, and this is where you got to be really careful. Don't turn it into a casino. Don't take your $1,000, especially if you don't know what you're doing, and go 100x your money, which means that that $1,000 is now turning into, what's the math on it? Is that now
1%.
$100,000.
$100,000,
Yeah.
right?
Yeah. A
But
thousand
there's a
times a
lot,
hundred is 100,000. Yeah.
and this is where risk management comes into play. Just like if you were going to leverage equity from your home, if you're going to be wise with the money that you're leveraging, you could make money on your money. But the caveat to that is you could lose it just as fast if you don't know what you're doing.
Yeah. It's still gambling. Only now you're gambling with a higher risk because you're kind of in a sense, what, borrowing or off borrowing based on the value, like, yeah. So if it works, great. But if it doesn't, not so great.
What Will was saying, so if you 100 times leverage, you only get a 1% slippage. So if it loses, it's it's your money is as far as it's going to go. Now there's other ways you can add to it and whatnot, but in simple terms, if you have $1,000, 10 times leverage, you have a 10% range that you could lose because after your money's gone, they're not going to put any more money up. So it's that risk to reward. In certain coins like Bitcoin, I 20 times leveraged because I felt confident in the fact that it wasn't going to fluctuate more than 5%. And this was last week. If you're going to do a Mooding or a Pepe or something that's more volatile, you got to watch that the higher leverage. You want to lower leverage and probably put more money in.
And the difference between not leveraging and leveraging would be you'd only gain, if you had a thousand bucks, the gains would only be from $1,000. But if you leverage it times 10, what you're saying sounds like you can 10 times your gains, but only lose barely.
Well, what would happen is with that $1,000, you would lose that $1,000. Whatever you put into that leverage trade, you're opening yourself up to, and Jeff has said it perfectly. It literally comes down to risk management. Can you do this as a professional? Yes, you can. Whole nother topic, and I will touch on it, is risk management because it is and deserves a whole episode because when you're talking about real estate and you're talking about leveraging your hard-earned dollars, are you going to do that without research? Are you going to pull money out of your house with no plan or no business that's already pre-thought out to reinvest that money? I would hope so. Because if not, and how we're relating it to crypto is now you're putting your $1,000 up. And like Jeff was saying, if you 10x leverage, which say price moves 1% and you're long and it moves in the direction that you intended it to, that 1% move is times 10. So for every 1%, it's 10% gain. So that's where it is risky, but it's worth me risking to gain that versus if you know how to use a stop loss properly before you invest any money, you should know where these protection points are. You should know where these take profit points are before you invest a dollar. And that's where you take something that most people do, and it's gambling. But in the investment world, it's called mitigating your risk. And we've said it before, scared money doesn't make money. So you can't be scared of doing this. You got to invest into yourself, find somebody that knows what they're talking about, get that mentorship, and hopefully you find the right one that aligns with you that will teach you what we're talking about today. And this is the value. Man, if people are listening to this and they think it's boring or they just don't hear the value, go rewatch a couple episodes ago and we're talking about buying fear because if you would have done that, you would have made money. That's free value. That's what we're offering.
Okay, so if you leverage up times 10 and when it goes up you 10 times your money, but when it goes down if you put the stop loss, you could mitigate your risk.
Yes.
So it sounds like a win-win program if you know how to do it, and if you're reasonably in tune and well read, and read the charts and everything. You're not going to do it blind, but there is kind of a safety net there with the stop loss. Is that right?
100%.
When you have 1,000 and you're leveraging 10, that's 10,000. So when you're losing on the 10,000, not the 1,000 because it's leveraged. But if you did not set a stop loss, the worst thing that'll happen is you lose the 1,000 that you put up, not 10.
Okay, so no matter what, you can't lose the 10 grand that you didn't have.
No, you'll lose the 1,000 you put in because it was leveraged by 10. Yes.
Okay, but with the stop loss, but what if you didn't put the stop loss and you leveraged?
Well, that's what I was saying. The worst thing that could happen is you get liquidated on your 1,000 that you initially put in.
Which would totally suck. Who wants to lose their 1,000? But like Mike was saying earlier, grab your nuggets, okay? Fondle them a little bit and go for it. I don't know.
You're
Let's
funny.
not get too happy. I'm getting a little freaky. I'm getting a little freaky here with the nugget doctor. Everyone's shaking their head and telling me I'm fired. Okay. So, but anyway, switching gears. Great topic. So, Mike, what do we got?
Well, well, we had a huge weekend. The Trump administration was very, very busy accomplishing a lot of things over the weekend that had implications to the markets, and I wanted to touch on those. He negotiated a release of the last American hostage in Gaza, which was good to get him home. He worked on a ceasefire with India and Pakistan, a ceasefire with the Houthis. He also worked on a trade deal with the United Kingdom. And more importantly, the biggest thing that he got done this weekend was working out a trade deal or a supposed trade deal with China where they, did another 90-day hold, lowering the tariffs from 145% to 30%, China 125 to 10%. And I think what it really is a pathway. That 90 days is a pathway to future negotiations, to get, these tariffs to a point that will be comfortable for both nations. And I think if we can get that, further negotiated and get those tariffs to a point where it benefits both of us, it's going to be great for the markets. We've seen um, the stock market rally hugely, yesterday on this news, and we had a kind of a short-lived rally in the crypto market. Um, Bitcoin was trading around 100K, 100, between 100K and 104 over, the last week, and it actually touched 105K, which is a pretty important resistance level. And it's live now. It's trading at 1037. So, kind of fizzling out, but we're, definitely hoping that if we can get a push up over 105 and get it to hold, that we might see levels like, all-time high levels of like 108, 109,000.
Pretty stimulating stuff. I mean, it's fair to say with all that can we kind of wrap the package with this, like, in this tumultuous last few weeks, we've saw stocks take a hit up to 1,000 points or whatever, something like that, right? And then we saw crypto remain pretty solid in the midst of it all, even though people are so funny about crypto and think whatever they think about its, stock seems so stable and more touchable than crypto, which seems, it's interesting medium. Let's put it that way. But at the same time, now that there's a little bit of a jump with all the things you're talking about, which come to play, stocks went up 1,000 again, and crypto stayed pretty solid in the mix. I mean, it's doing well, but it didn't go like, whoom, whoom, whoom.
Yeah, it was a little bit of an inverse reaction. Like you said a couple of weeks ago, when the stock market was tanking, Bitcoin was actually doing relatively well, or the crypto market in general. So, that's very interesting. A lot of people, traders, analysts have been talking about Bitcoin decoupling from the NASDAQ, which kind of historically Bitcoin has mirrored the, reaction or, influenced by the NASDAQ. And over the last couple of weeks, we've kind of seen the decoupling of that, which is a good sign that Bitcoin and the cryptocurrency market is holding on its own and not being so influenced by, the traditional markets.
I think two interesting things is with all this news that we've had the last few days, I personally thought Bitcoin and everything else would have went through the roof. I think that there's theory that everything has been overbought.
Or maybe that's already been priced into the market, whereas with the stock market, it obviously wasn't, because the stock market now and even the cryptocurrency market has basically recovered almost to the levels of the prelim or the Liberation Day, April 2nd levels. So, if you wouldn't have bought into the fear and you would have either held, you'd be kind of relatively back to where you were, a month ago.
But if you had sold at a high if you sold somewhere in the high 90s, wherever it was, whatever it peaked before, because was it, whatever, call it around 100, high 90s, mid 90s, whatever, and then rebought it when it went to 73 or 4,
you'd have probably 30-40% on your money, depending. You could have pretty much threw a dart at any of the big five and done very well, with Ethereum, Solana, Sui did really well. All those have all recovered. And I think that these meme coins that Jeff was talking about, didn't recover as quickly, but just, went crazy the last few days.
I mean, there's a lot to be said for right now being a really stimulating time in the last few months. What a stimulating time. A lot to learn from. I know everyone's got different experiences or whatever with how they've managed their risk or whatever, how they're investing, where they pulled back and, went surfing and went to the pump track or, took a hike or whatever, or they jumped in, whether they bought the fear or didn't buy the fear, whatever they did. One thing we can definitely all agree on is that it's been a very interesting time, and there's a lot to learn from moving forward, what the market may or may not do, because no one's got a crystal ball. It seems possible that some of the learning that we could have learned in the last few weeks or months could really be valuable this year in 2025, as we may possibly see some big gains. I don't know. It's just what I feel, and I don't know much.
And we saw, a big mover. I mean, Ethereum hasn't been doing anything, and I believe it went around 20%. I mean, Ethereum is, big in the news. We've been waiting for it. It moves, and that's quite interesting for me. So now we have something else to watch, because I have been watching Ethereum.
And you think that'll come in hot in time? It's more of a, like you're saying, it's not doing that much right now, but do you believe it? Obviously, people believe in Ethereum, but is that more of a long, like you feel like, 6 months, a year, 2 years, that thing's going to be the, shoulda, woulda, coulda program? Not that we would ever want to say that again.
No, it actually moved. We've been waiting for a long time. It hasn't really done much of anything, and it moved.
What did it move from and to, if you don't mind me asking?
I believe the low was around 15. It was hanging around 18-ish, and I believe it hit 25.
Oh,
2,500 to be specific, and I think around 20%. So out of the top five, it moved the most, and that's what we've been waiting for.
As we speak on Ethereum, it's 2614.
Oh,
So, it's up actually 5% today as well.
5% today. Nice stuff.
and what's the total for the week, Mike? That's going to put it at about 26.7% gain.
Damn.
I'd have to take me 2 seconds to let me see here.
Are you asking for the 7 day?
Yeah, or just what it's moved. I mean, if you took 18 and 26, that's 800.
Well,
That's might be stronger than that.
within the last 7 days, and tell me what you come up with, Mike, but it's up
Wow.
47.3% in the last 7 days at Ethereum.
Yeah.
Okay. So back to my always kind of equation on, looking at the cold card cashish. So if you had 100 grand, you'd now have 147.
Yes, sir.
Correct.
Yeah. I mean, there's exciting news out there. I think what do you guys, I mean, we don't give investment advice and we don't do all of that, but I mean, do we feel like still that in 2025 at some point when kind of stuff stabilizes, if it does, okay, we've heard a lot about, they just Mike mentioned they just got the last hostage or the last American hostage out of Gaza. Is that fair to say?
Yeah.
Hamas gave that over, or him, want to humanize him for sure. And what a gnarly thing. Just, whoa. That they're working on just so many there's a new pope. There's just so many neat things going on. There's a lot of trouble in the world, but it feels like maybe we've come around the bend from the darkest of the dark. And maybe we're going to start making sense of China and all these different things. Do we feel like once that stabilizes, once again, if it does, that we might be looking at, as we look back, we might go, man, this stuff went bonkers for 2-3 months, where you could look at, Bitcoin that was sitting around 10 something and go to 150 or 200 or 300 or whatever, some crazy time when you look back in history and go, wow, there was some moments where shit went nuts, and then that became the new low.
It's been happening since the genesis of Bitcoin. So good point.
I feel like we might be, I don't know. I know the least out of all four of us, but I can say that, I don't know why it is, but my instincts feel like markets, real estate. I mean, let's put it this way. If Trump actually did pull off, and Trump and his administration, right? He's not a one-man show, but if he was able to get gas prices down to, and here in California, we just get robbed blind for gas. I mean, basically $5, depending on where, what, and when and where you buy it. But if it did someday come back to $2.50 or $3, if interest rates dropped by whatever percentage points that he can figure out to kick that dude in the dick and make that happen. And then, I mean, that's what it might take. And then, if food prices drop, if really we get a little more strength to our spending dollar, oh my gosh, doesn't it seem like we could just be looking at a really solid time for stocks, crypto, real estate? I mean, we might come into a golden era, but then again, it might all be an illusion, and who knows? Because I'm not an economist, at all. And I talk to different economists, and they all say different stuff. So there's no real actual what is the truth, and that there's one story. But I don't know. What do you guys think about? I know we talked about it on different episodes. It's kind of a unique week with what's going on. Like Mike said, Mike's topic about, the Trump administration had a very busy weekend and some neat stuff on the table.
As for the gas situation, I'll just bring this up real quick. It's hard to kind of figure out because California, we're in the $5 range, right? Oklahoma's 2 something. So if we go down to $3, does that mean Oklahoma's going to hit $1?
I don't think so. I don't think they're as volatile with their gas prices in that state that we are. Yeah, I don't think so.
That was my point. So that's more of a state issue.
I think it's a combination of the two. Yeah. Yeah. The national situation with our drilling and everything we do with distribution and everything plays a part. But yeah, our state tax is just, it's basically, just bank robbery. I mean, it's Billy the Kid, I'm just saying it's insane when you pull up to the pump and you realize in Oklahoma they're paying $2 or whatever they're paying. It's absolutely bizarre. But so so there's the gas situation, but the food situation, interest rates, all this stuff, if it comes to play, and we actually do see, because I saw something last night where they were talking about that, all these prices have gone down. I'm going, that's funny, because I went to the pump last night and it wasn't 1 penny less. And I bought vegetables last night and they weren't 1 penny less. So I know that's a little quick, and I'm not trying to be a knee-jerk guy, but, they can't claim yet that we've really, politicians a lot of times try to come in and, get you all stoked on what they're doing. But I'm a little cynical when it comes to actually going, okay, well, then let me go to the gas station. I need hard change, real change. Okay. I'm not saying it should have happened by now and it's not going to happen, but it hasn't happened at the pump where I go.
Well, what's interesting of what you're saying is take the state of California, where I live, to live in the mountains, and I live by federal land, but land that's owned by an Indian tribe. I'm paying $4.19 a gallon on federal land where they don't sell lotto. Why? Because that's a state thing. But why is it that on federal land gas is cheaper in the same state, but then if I drive, 30 minutes down the road and it goes from 4.19 to $5?
Is that because the Indians get they don't get taxed as much or something?
It's just a difference between like federal versus the state. And when I start to think about like what you were saying, it just sounds like it sounds like a mess. Nobody's on the same page. It comes down to consumers, how much, like in California, obviously more gas is being consumed than going back east to to these states that it's only, $2.50, like Jeff is mentioning. Why? And you brought this point up too, and I pray, that there's some sort of like a level playing field, whether it's taxes or what we're being not just taxed on, what we're spending our money on. It's just 'cause why is it cheaper in one state and then more expensive in another?
Supply and demand.
Which I know, but it's just not even.
Think of that for a second. So when you're buying in bulk, which California is, because we've got a lot more people buying gas, you'd think we'd get a cheaper rate because
Right.
California's selling more gas. It's
Yes.
kind of the opposite.
I
The-
like what you're saying,
we're
mister.
totally consuming more gas and getting charged more.
Thank
And
you.
I
I want-
understand
I like what you're
California.
saying, and I think you should run for governor.
I'm ready.
I mean, geez, man,
Sign
this
me
guy, man, I don't know what's going on, but it seems like it's just gosh, man, come on. Someone needs to cut us some slack. Whoever they are, we need to get to, if we could get the gas prices down, we could really kick ass, you know? I mean, at the end of the day, if we had more available dollars, those people would probably be buying into crypto. You know, some of the, you know what I mean? Their crypto would jump, everything would jump. I'm just saying, like, so switching gears again, Will, you have something that you want to bring to our attention this week, and what might that be?
And I want to talk about the market compass, the compass, right, in which I make my financial decisions based upon. And then that leads to one of two things. It's either a boom or a bust is going to happen. So we could talk about news all day long. Mike is really good at bringing that information to the table because the administration, like you were mentioning, they're putting in the work. But the way that I perceive that is they're just puppets to people that are really running the world. And how I stay away from busting and fall into the boom or making gains, I don't listen to the news. I follow the money. When you follow the money will tell you what's happening in the world. Go back a couple weeks ago and the stock market is being liquidated. People are taking trillions of dollars. We've had it happen to the crypto market. Well, that money doesn't disappear. Where does that money go? Well, you bring up gold. Go look at that chart. And you could see gold recently was at an all-time high of about what, $3,300 per ounce. That chart is telling me where the money is flowing because money just transfers from the impatient, I've made this point before, to the people that are patient. Their time horizons are a lot wider than what most retail is geared towards because they're listening to the news. They're being distracted. And then if you're distracted, do you think you're going to go make a wise financial decision if you're distracted and you're not fully present to what's really going on?
You know,
That's the point that I want to make. We, Crypto Posse, is bringing the value because if you're a Trump supporter or you're not, that's irrelevant. That's the distraction. Because if you're going to engage into a conversation about how you're a supporter or you're not, it sounds like you're becoming less stoic and more emotional. What happens when you go make that decision that's important, not just to you or maybe to your family, and you're being distracted? That's not how I roll. That's why I wanted to bring up where are you getting your information from? And is that going to lead to gains, boom in your life, or is it going to lead to a bust and now you're losing? And hopefully at some point you find a crypto posse, a group of people that are self-educated, that are just opening up dialogue. I'm not saying anybody's right or wrong, but I don't see other channels talking about this stuff. We are. And it's beautiful how it all ties in together because going back, and we'll touch on it, using fear or greed, again, we've brought this up. If you simplify your decisions on investments and you base it upon reprogramming your mind to think like this, when it's fear, you buy, and when it's greed, you sell. If you could follow that simple layout, you're going to boom all day long. Or like the word that I have now adopted, now you're making the kashish and you've got a lot more freedom in your life to go do the things that you actually were born to do, not to be a slave to some system. Be creative, whether it's surfing, hiking, rock climbing, touching grass, hanging out with friends and family at a barbecue. It opens up so many doors to enjoy life.
I love it when you talk like this. I got to say, Crypto Posse never feels more like humanized.
And I just want to say too, for myself, the fear and greed index, I used to follow it. I'm looking at so many different charts and ways to trade, buy and sell, and when am I jumping in? I'm actually going to today go back to what you just said, simple terms. I'm only going to look at the fear and greed, and then I'm going to pick something that I feel, is going to move up because you just said it. It's simple. And since we were talking about this prior to the show, it dawned on me. I'm looking at the timeline of the fear and greed when it was low to high. Simple. The market moved up, and if you took everything away and just follow that, you might not be make the most money that you could, but you are going to make money.
Beautifully said. The only thing I want to add to that, and I want to say thank you to you too, Joseph. You're the captain to this ship, and I love that you represent the people that are learning about something new because those questions you ask are amazing. And I know we've heard this since elementary school. There is no dumb question. And to the point that you were saying, if you want to just say hi in the comment section and just open up that dialogue, that's what we're here for. But to what you had just mentioned, Jeff, simplicity always is going to win. We live in such a complex distraction of a world. It's easy to get lost in the sauce. But when you take a step back, you take a deep breath, you reevaluate and simplify what it is you're trying to accomplish, you're going to get there. You're going to boom with the market. You're not going to bust when the market is in fear mode. You're going to reprogram, like you just mentioned again, you're going to buy into that. And then once the market and everybody, and this is actually a perfect example. What a good indicator when I'm at the park. I love getting outside. I love getting fresh air. I love touching grass. And as I'm doing that, there's a dude across the park talking about XRP. And this is when XRP was above $3. That is an indicator we're approaching these greedy levels. And then what's interesting is you go look at that fear and greed index chart, and from that guy talking to where the greed was, they match up perfectly. And so that's all it is. It's a really good indicator that's going to help mold your decision when it's an important one when it comes to finance. And why I talk about these things, I'm passionate. I don't even need to get paid to do any of this stuff. I just like helping other people not make the same mistakes that I made because we're so good at complicating life that by the time you hear somebody share it in a simple form, just like what you had just mentioned, Jeff, now you're like, man, I'm going to go back to the basics because that's what's going to help you win.
I think you have to be careful when you're, like you're saying, when you see that greed. Unfortunately, that's when a lot of retail investors come in and then they get demolished. So you got to think opposite of that kind of thinking, and all the hype, you want to stay away from it. You want to try to get in and buy that bottom. That's always a tough thing to do. So when you see that fear, you like you've talked about a lot, Will, is dollar cost average in. If you're sitting there with 50 grand you want to invest, maybe you put 25 in when you think you've got to a bottom. And then if it dips more, then you could cost average in, and then, hopefully you're in at a good position. And then next time the market runs, you're looking good.
And that's a great way too. I noticed for myself this week, sometimes I've been trying to learn too much. I'm learning this AI, right? And it's great, but it's like hopping in a exotic sports car when you're driving something simple. You're not going to get the total use out of it because all these buttons, you don't know what they are. But in time, because I do want to learn more and more, I will. But it goes back to basic trading.
The fundamentals of basic trading are your foundation. And as you spend more time and more time, then you get to possibly go boom, like what Will is referencing. Just want to say, is there any things that you guys would like to do? And then, as we're about to close the show, anything we could get into just as a wrap, just about just whatever, anything into, whatever, any topic, anything interests you guys. We close the show on some cool talk about something.
I mean, I'd like to share because listening to you guys in this episode and then rewatching a couple of the previous episodes, I think a common theme that comes up is strategy. So I think next episode, I want to dive deeper into what that looks like and how to utilize a strategy to actually profit from. And then moving forward, that's just going to add more value to all the listeners. Because it's not about politics. It's about making money.
You make such a good point with that, Will. It's not about politics. It's about following the charts, following the money, following your instincts, as Mike said, grabbing your nuts. It's like what Jeff does, so much research. It's like all these factors to come to the table and then go, well, hey, let's make a move or let's not make a move. Whatever that feels like, it's kind of, there's got to be some human instinct. Yes, we play with AI. Yes, we read charts. Yes, we listen to news. We do all kinds of things. But at the end of the day, it's going to be the human inside of you, the impulsive, instinctive feeling you have to either go for it or not go for it. And I just, I think that's what it comes down to. And I think that's hopefully what we can do mostly is inspire our listeners to just tap into that, whatever that is. Hopefully we can bring something of value to the table. I think we do. And I appreciate you guys for showing up. And to all you viewers out there, comment, like, subscribe. Thank you very much. Have a great week. Let's get out there and have some fun. Peace.